billions worth of dark pool prints, investor bearishness at record levels, and even egg prices falling negative 60% just this month alone. A lot to talk about in today's video. First off, I want to direct your attention to the dark pool levels feature here on Cheddar Flow. You can see there was a lot of premium on Friday, and that's not a surprise necessarily because it was March OPEX. Characteristically, that is one of the highest amounts of premium you'll see is on March OPEX as well as September. And that's mainly because it is the last month of the quarter. But what's interesting about this is we can use this data to derive certain key levels going into the following day, couple days, even couple weeks for price. So as we can see over here, there's 2 billion worth of premium at this 564.48 level, and 1 cent under is 3.2 billion premium. That's 5+ billion in premium between a 1 cent differential here at 564.48-ish. So that's a hefty amount even for an OPEX day. You can see it just a little bit lower. We had 2.6 billion in premium. So if you go over to the chart over here, you can see if I go to the 15-minute, that we can mark these levels, and these are going to be critical to cross, at least for bulls, since it is higher up right now than where we closed. And it's also going to be critical for bears to keep it under going into this week. So again, this is 564.48 roughly. We can just use a line here on TradingView and mark it right at that level over here. And you can see there is actually a rejection near end of day about at this level. So I have to zoom in a little bit to optimize it, but I'm not going to go in and try to do this to every single one. You can see here was a little bit of rejection, but come Monday, if we were to gap above this or push above this early on in the session, that would be a great sign for bulls. Be great if they could get it above this. And I like to color code some of my dark pool prints. They don't typically work that well after like a couple weeks, but at least going into that week, whenever there's a sizable print, I like to mark them and see how price reacts around that level. Sometimes I do it purple like this over here, which is a key differentiator because if you have certain support or resistance levels you have marked or pivots like I do, like this 563.76 pivot I mentioned last week, this is different how I derive these levels compared to a dark pool print like this. So that's the first thing I wanted to mention in this video. This will be a critical level for bulls to get over. You can see if we scroll down here, 4.6 billion at 559.52 plus 1.7 billion at 559.53. So same thing here, large amount of premium, over 5 billion, over 6 billion in this case here. And we're going to want to put that on our charts so we can reference it going into the next week. And you'll find something interesting over here is that this is near a low of day. So right about here, we did have that print come in, and you can see that there was a nice upside move off of that. So bulls, their best interest is to get above both of these prints come Monday as soon as possible. Bears, they're going to want to find a rejection here again, like they did end of day, and get this below 559.51 as soon as possible. And then there's flush risk from there, gap risk, a gap fill risk rather. Over here on this gap, you can see this would be a fill around 551.38-ish. So bears have a lot more work cut out for them at the moment, but still very possible, especially after that momentum that they've seen in previous weeks thus far. So the plan this week is just to base my trade setup off of these levels. And really, it's going to have to be more technical related than anything, because if you go to the flow over here from last week, it was a lot of back and forth flow on SPY and even QQQ. We can see if we just filter for over 1 million in premium, that it was a lot of call buys, put sells even. We saw a lot of those. You can see over here, put sell, and then more put buys over here, even call sell orders. So really everything across the board, just a lot of back and forth in the flow. And there's no surprise to that either, because you could see over here, it was a lot of back and forth price action. The entire week was just chopping sideways all the way since Monday over here to Friday. It was just stuck within a range. Even after we had FOMC on Wednesday, it really didn't move that much. So it's building up energy for wherever it decides to go from here. And again, if it is to be with that upside move, we want to see it stay above both of these levels. If it's to be the bearish move, you want to see it stay below both of these levels. And that's on an intermediate term. I'm not looking like weeks in advance and basing it off these levels. I want to make that clear. This is something that can be a multi-day move, maybe even just a day or two in that direction, but it is a tradable move. And that's what I care about. A tradable trend move at that. We're probably going to see it trend at least intraday once this range breaks over here, because this is a lot of built up energy, like I said. So if we can see a push higher come Monday above this 564.49 level, I will add calls on this S&P 500, looking for something like April or even May, reaching a bit further. And I will look for an upside move. My first target is actually pretty aggressive, or at least seems aggressive, but it is still 580.92. I referenced this in last week's YouTube video. And the reason I have this level, if you don't remember what I said in that video is because this was the lower end of the previous range that we were stuck within. If you remember, S&P 500, I'll go to the daily over here. It was stuck within a range for about 3 months long. And the lower end of the range over here, as you can see where it found support about 5 or 6 times, was off this 580.92 level. So this level is critical. Even if you are bearish for continuation to this correction, it is not out of the picture that we see something like an upside move, kind of like this, where we see upside to retest 580.92 at the very least. I'm not even saying this is something that has to reclaim it. I'd love to see that. But as for a trade setup in the short term, this is what I'm looking for, is that upside move to around 580.92. It can retest this level. I can take profits at that level. And then based on what it does as the reaction to this level, that will determine what my next trade setup is. So the first trade setup is just getting there in the first place, because that's a good 15, 16, even 17 points based on where we closed on Friday. But then the second setup is what happens. Do we see a hard rejection and continuation down? If so, then I'll sit cash and wait for this to bottom out. Or do we see it maybe pull back a little bit, curl, pop back above, and this is something that can continue a lot higher to like 590, maybe even 600? It's a second setup. Or does this just keep grinding higher? Kind of what we saw in like 2023, where this is just straight out of the gates, continues all the way up a lot higher to 600. And what I mentioned in 2023, I could show you really quickly here. Not like this happens all the time, but this was a straight melt up. We saw this continue much higher, really no pullbacks, all things considered. Even over here where we saw consolidation, didn't really pull back at all until much, much later, after it had a very nice upside move to around 520. So that's still a possibility as well. And it's all dependent on how price reacts to certain levels, like this previous low to the previous range for SPY. So that's my plan for SPY, looking for that upside move. Again, that is contingent in the near term, and I'm talking intraday, on us getting above both these levels. I'm not going to add calls if we're below 559.51, for example. And if I did add calls, if we gapped up, let's say to like 565, 564, added off of here, and we fall down back to like 559.51, I'm going to get out of those, and that's my risk. That is something I'll take a loss on. You have to have that stop loss in every single setup. I always preach that. In this case here, 559.51 would be that stop. So I want to get it as close as possible to this level without risking a breakdown to the structure. Otherwise, if we open up with a gap down or flat or something, I'm going to hold off. I'm not going to rush the setup. No reason to, especially when we've been consolidating for so long. Like if you added last week at the beginning of the week, the premium would be burned out, depending on the contracts, of course, but don't want to risk more consolidation or this thing dropping. Want to have confirmation. Big believer in looking for confirmation based on candles and even fundamentals to a degree. And once you see that confirmation, then follow through with that entry setup. Have your stop predetermined and hold for the duration that you plan on holding. So that's my plan for the S&P 500. Going back over to here, based on flow we saw last week, interestingly enough, Tesla actually still had a lot of bearish flow. Something interesting is happening here overall, and you can see 85% put flow to 14% call flow last week. It actually ended the week on a higher note, just because you could see these calls here. But if you scroll back, especially early on in the week, there was a ton of puts, like this 250 strike one, 175 strike. This is a split order, so it's probably part of a spread in this case, but 200 strike over here for the April expiration. So pretty aggressive to the downside, but that was mostly early week. And like I said, once the week went on, you can see over here, we saw some put sell orders and then some call orders. So looking a bit better based on the end of the week for Tesla. And this is something that's been in an aggressive downtrend for a while now. I actually am bullish on this one. I'd like to see it. Well, not only do I want to see it go up, but in this case here, I say that this is very oversold, and it has been for a while. There's also a lot of negative sentiment around this one, and just the company in general, Elon in general, that we've seen. And Elon, regardless what you think of him, he's not someone you want to bet against. I'll just put that lightly. At least throughout history, he's proven to be a winner, all things considered. So I like to put my money behind winners. I've been talking about this one now, interested in this one. It is very oversold, in my opinion. Not only my opinion, just based on indicators. Something as basic as RSI proves that. But the main level that this one wants to get to, that will determine the trajectory really for the rest of the upcoming quarter, is back up to this uptrend. We broke below it, and that's where it got really oversold. And we saw this flush day over here, this negative 15% day back here on March 10th. And this uptrend was kind of the culprit of this flush, because we broke down below it. So if we can reclaim this uptrend that started all the way back here in April of 2024, that'd be very bullish for Tesla. We could see a lot higher. If for whatever reason, similar to what I showed you on SPY, we go all the way up to retest it, and then there's a hard rejection, that would be bearish for smart because this would act as a hard resistance. But at the moment, this is something I think can go a lot higher from current levels. And if it is able to surpass this uptrend, able to reclaim it, then this is something that can go even higher from there back into the 300s. So my plan on Tesla is mainly just share accumulation. I'm not really trading the options on this. I haven't really seen too much yet. It's a good sign to see these on Friday, like the 1.1 million 250 strike call for April. That's good in the short term, but you need to see a lot more, especially because of the amount of puts that we saw in previous weeks. They really were hitting the tape with those puts, and you want to make sure that there's that same bullishness aspect once the tape flips in this case. So want to see a lot more of these calls going to this week. That'd be a great complement to what I'm seeing technical wise at this oversold level that it is at right now. So that's my plan for Tesla, mainly share accumulation and hold those for like 3, 4, maybe even 5 months. A little bit different than my SPY setup, which is call based and something I'll hold for 1, 2 or so weeks. But I believe this one will be rewarding to those that just buy and hold. So that's my plan on Tesla. And then the last thing I want to mention over here is the VIX. We saw a nice high print pretty close to 30, and it's just been completely shattered since then, all the way back to 19 to end last week. So a really drastic drawdown. And it's interesting that if you go over to SPY again, the S&P 500 really hasn't went up that much since its current low around here, which is, by the way, very interestingly at the 0.618 retracement for Fibonacci, like the exact level so far. So that's, by the way, going all the way back using this low over here, the August 5th low, and then the high that we had over here on February 19th, if you want to draw that on your own charts. But so far, this 0.618 retracement has stopped the bleeding on the S&P 500, and we've seen a insane downside move on the VIX. So volatility has abated to a degree, to a substantial degree, thus far after this breakout that we saw back here. If you remember those guys that bought the VIX calls all the way back on the 19th of February and 18th of February, they got out of theirs a couple days before the actual high hit, and then now we saw it go down a lot lower. So it's still possible we see a bounce on the way down, but right now it looks like a high has printed, at least a local high, which of course would be bullish for equities. Still, you can't take it out of the picture where we see something like a bounce to like 24 again and the lower highs met, and then continuation a lot lower going into quarter 2, not taking that out of the equation. And that of course would be something that would be bearish for a day or two on the S&P 500. But so far, based on this high, this looks like something, especially with the wick that we saw and the trajectory of it, and then the immediate rejection, this looks like something that will print as a local high. So that's something to watch for. We really haven't seen any calls hit the tape on VIX like we were seeing at the beginning of the month and in February, like I just referenced. Only one notable print over 1 million in premium from last week. That just goes to show you compared to, and I'll just show you as the last thing in the video back here, when you just go from the 17th, I think it was, all the way, we'll just do that week, the 17th to the 21st of February. Like, look at all these calls here. It's crazy. The amount of premium we saw and the spot price at the time, 17, 18, etc. And they're going pretty far out the money on all of these. So we haven't seen anything like that since it printed its high. So that leads me to believe we're more so in a volatility downtrend now, which of course would be beneficial to equities. Regardless, big events are finally out of the way, like we saw last week with FOMC, OPEX, etc. So finally time for the market to make up its mind after it's digested all of that news. So should be interesting week ahead. As always, appreciate you guys watching this video. I'll see you next time.